we've seen a strong move from the under 45s to move to self-directed vehicles. And as the wealth comes down the chain to them, they'll be placing those amounts in self-directed vehicles. This isn't just about access to crypto. This is a fundamental shift in the digital system globally towards access to assets at an individual level that historically had only ever been available at an institutional level. Anyone who's an expert in finance listening to this, the first thing you think is concentration risk.
Hi, and welcome to Conversations with CoreData. My name is Anna, and I'm a research consultant at CoreData. And today we're going to discuss a very exciting piece of research that we recently undertook with OKX Australia. And I'm joined by Kate Cooper, who is the CEO of OKX Australia. Kate, lovely to have you here.
Thank you for having me.
Super excited to get into this conversation. But first I want to hear from you, what actually made you commission this piece of research? What were you seeing that got you interested in it?
Yeah, I think we've been in the SMSF space for about a year now, and we were seeing the conversation very much anchored around compliance and it being a compliance problem and the challenges SMSFs face from a compliance perspective. But we were seeing as we grew our user base, as more and more SMSF customers came to our platform, we were seeing something quite different in the data we have access to and just our conversations with our clients. We spend a lot of time kind of in one-to-one servicing with our clients. And the interesting thing was the level of conviction we were seeing in digital assets. It surprised me. And the feedback we were getting, and this was anecdotal feedback, just in conversations around the fact that digital assets seemed to be a driving factor in not just investment decisions, but actually the establishment of SMSFs in and of itself. And so we had the anecdotal evidence, but we wanted to really stress test that with a proper and material group of individuals so that we could really understand and uncover that for ourselves. But the findings are so interesting that we decided to release the research in full to the broader industry just to help enable a wider conversation about the structural shifts we're seeing.
Mm-hmm. And you've mentioned you've moved into the SMSF space. So maybe just briefly for our listeners that don't know much about OKX, which is a crypto exchange, could you just give us a little bit of an overview of OKX Australia and sort of why you've moved into this space in SMSFs?
Yes, so I joined OKX about 18 months ago from a traditional finance background. So I was at NAB and at Westpac. And I personally set up an SMSF to be able to invest in digital assets. And so when I joined OKX, broadly speaking, we have about 150 million customers globally. We're on any given day second or third largest exchange by trading volume in the world. And onshore in Australia, we've focused very much on the compliance side of things. Really, for us, the self-managed super fund space, we saw a gap, and I felt the gap as a trustee myself in a full suite platform that services the full needs of trustees in a compliant way. So very selfishly, I built the solution for myself. And we're finding that it's having huge resonance, in particular for people who want to have the confidence of knowing, for example, that they're with an exchange that holds assets one-to-one. And you can see at any given moment the top 20 assets globally via our proof of reserves service. So it just gives trustees confidence.
Mm-hmm. Now, you mentioned a few things there about reporting and that kind of thing. I do want to dig into that a little bit later because the system, our superannuation system, wasn't really built for this now. So it really has to go through some sort of maturation to actually get there for the sort of servicing these members in the future. But maybe we'll just sort of give an outline of what this research was for our listeners. So basically, it was quite a broad approach. We did a a survey among 808 investors, and they were made up of largely SMSF trustees, so trustees with crypto as well as trustees without crypto. And then we also wanted to go out to crypto holders themselves to understand that appetite, to really give a broad view over what is happening. And then to sort of supplement that quantitative depth, we also went out to 12 trustees across those with digital assets and without, and some that actually held digital assets outside of their SMSF, to understand their experiences and see what was motivating them in this space. But sort of before we get through the findings of this research, Kate, was there one stat or one headline that surprised you? I know you've been in this space for a long time, but was there any surprises?
I think the thing that most surprised me was the extent to which we uncovered that exposure to digital assets was a driving factor amongst trustees for establishing an SMSF in the first place. Like I say, that was my driving reason, but I assumed I was an outlier. And I assumed it was partly because I've been, in the industry for 10 years and obviously have quite strong conviction. But what we found is the data strongly indicated that that was a real driving factor for SMSF creation, and that for me was a surprising factor. Like I say, I thought I was an outlier.
Yeah, I mean, I can resonate with that because when you came to us with this piece of research, anecdotally, I've heard of this happening, of people who hold digital assets needing a way to better structure it in terms of tax and these kind of things, long-term holding. So yeah, it was really exciting to actually see that reflected in our results. Now I might take us through the findings, the first one being this more broad picture of the SMSF acceleration, and that's where we've seen the amount of people setting up SMSFs in the past 5 years really grow. For instance, in the financial year 24 to 25, which is the latest data from the ATO, we saw 30,000 plus net new funds. And now that's a 91% increase on the year before. If you sort of give some perspective, in 2020 to 2021, it was only 7,000. So it's really growing.
I think that year has been the highest annual growth on record.
It is, yeah.
Really quite extraordinarily.
Yeah. And another sort of key part of that is the people that are setting up SMSFs these days. So the trend is moving younger. So under 45s represented almost half of that, despite them only making up about 15% of that population. So we're sort of seeing a change in who is interested in having control. What do you think is going on there?
Yeah, look, listen, I think we're seeing, broadly speaking, and the data certainly reinforce this, two cohorts. You've got the established investors who are growing their balances, and really we saw that a driver for them was more control, more agency in their investment decisions. And so that's one cohort. But the second cohort is, in my opinion, newer and more consequential, which, as you touched on, younger Australians. And in that cohort, the specific conviction in asset classes was very marked, I would say. And the challenge is that the traditional funds don't offer access to those alternative assets. And so they really are looking for exposure to a broader set of opportunities, which is one of the reasons why they've been establishing SMSFs.
Well, that sort of dovetails very nicely into the next key finding, which is what we were just touching on before around digital assets actually being a driver for SMSF establishment among those that are holding them. This was really exciting. So we say, 46% of SMS trustees that we actually surveyed said it was a primary driver. And that actually ranked up there on par with control as a primary driver. And we know control is the number one factor for SMSF trustees broadly. What does this mean for the industry if we're going to see this new wave of people who are kind of having a different mindset to this? They're much more digitally native, the younger population and so on. how does that change how superannuation has to actually function?
Yeah, absolutely. But listen, I think it's important to caveat that 46% figure by saying that was obviously from our sample size. But if you extrapolate that out in terms of what that indicates structurally, I think it's really quite interesting, because for the last 10 years, we've seen kind of crypto be the primary digital asset that everyone is aware of. It's known for being speculative. But we've seen a significant shift in the last 2 to 3 years with institutional engagement with crypto, but also with tokenisation of real world assets. And so this isn't just about access to crypto. This is a fundamental shift in the digital system globally towards access to assets at an individual level that historically had only ever been available at an institutional level. I was fascinated by Larry Fink's recent annual letter, where he talked about decentralized finance being one of the great innovations, and he was talking about democracy and access to investment as a way to help make sure that trickle down happens in terms of wealth creation. And so, and that was fascinating to see someone, a very big figure from the traditional finance world, acknowledge that. And, you know, that's at the big end of town. And then we've got at the trustee end of town with self-managed super funds wanting to diversify the exposures that they have. And as more and more assets get tokenized, so we're seeing, for example, money market funds getting tokenized globally, there's access to that for the individual trustees. And I think that that's really, really interesting, really exciting for me personally as an investor. It's having me be engaged in my personal wealth journey as I go through the accumulation phase in a whole other way, and be much more active in my own investment choices, which is certainly some of the themes we saw in the research.
Yeah, I think that's a really important point to stress, that it's not just about holding what many people know as crypto tokens or so on. It opens up this whole new world. So you can tokenize real estate, for example. And I know many of the younger generation are feeling quite locked out of that market. So this could open up a way for them to get into that through fractional investing.
Absolutely. And there's a recent project that was run by the Digital Finance Cooperative Research Centre called Project Acacia in partnership with the Reserve Bank of Australia. And one of the use cases from that project was tokenisation of government bonds. And so we're seeing it like not just in the rest of the world, but onshore in Australia, and the consequential financial settings being engaged in that tokenization journey. So I think that's a really interesting move for the entire market as that tokenization theme comes to the fore.
Certainly. I might bring us back to the findings around our SMSF trustees with crypto. So what we saw there's this very high concentration in crypto. They're very convicted in the asset class, which I wanted to get your sense on whether you were surprised about this. I mean, they are an early adopter in this space. What were your thoughts on that?
Yeah, look, listen, we saw 47% allocate 50% more of their fund to digital assets, and amazingly 28% allocated over 90%. Now, you know, if anyone who's an expert in finance listening to this, the first thing you think is concentration risk. Yeah. And obviously that's a challenge, that's a risk. And we've seen Bitcoin drop, you know, more than 60% multiple times over the years. So, you know, I think that it's a real risk, and it's something that trustees absolutely need to be aware of. But I think also context matters. Many of the positions and the trustees we talked to had invested early, so they have seen, despite the volatility they've seen over the track of time, kind of material gains. And we also saw that just because they had a SMSF and they were holding digital assets in the SMSF, that didn't always represent their entire retirement portfolio. Many also held APRA funds. And so, they were managing their own concentration risk in that way, even though the vast majority of their SMSF was used to invest in digital assets.
Yeah, that's very good point. A bit of a caveat to that ATO data, and something that came through in some of the interviews, and people were still holding their traditional fund alongside their SMSF, which they focused on getting, say, Bitcoin exposure in. But clearly they do need support, and that's the sort of next finding around this research is the systems gap. So from the research that CoreData has done among financial advisors, we saw that only 1 in 10 actually have it on their approved product list. So that's severely limiting their ability to actually help clients who hold digital assets. How big of a problem is that in advice?
Yeah, look, listen, we're seeing, I would say, frustration amongst trustees, but also amongst the advisor community. Obviously, we work with them quite closely, that provision and regulation hasn't caught up, and they're almost in a bind, because their clients are pulling for advice on, kind of allocation, and especially allocation to alternative asset classes. But the financial advisors have their hand behind their back. And so I think one of the things we've been very focused on at OKX is education, and helping to support the advisor community to build their own expertise and knowledge, such that as the evolution of applicability to approved product lists happens, they are armed with the information they need to be able to advise their clients to the best of their ability. So that's been a big focus for us at OKX.
Absolutely. You can't just open the gates when people aren't understanding these assets. So advisor education in this area is very essential. Of the sort of challenges that SMSF trustees with crypto had, we saw that the top one was actually around understanding ATO compliance. So there's potentially a need for guidance there, as well as clarification of that actual guidance from the regulators.
Absolutely. And when we were building out our product, we worked with a number of different, for example, auditors, to really deeply understand not just, what does it say on paper is required, but what's actually required in the auditing process in order to meet the ATO's requirements. And I think that that's been a really important feature of what trustees are looking for, is they're looking for as seamless a journey as possible. And that's been something that we've built into our product.
Now, we also have this sort of shift happening in this context of the intergenerational wealth transfer, which is really an important point to bring up here, because it's going to see 5.4 trillion actually handed over. And, around half of that is going to flow to people under 50 years old, who we've mentioned have this different kind of appetite. They have higher trust in digital assets, higher confidence navigating it, and so on. What do you think that effect is going to have on the future, and how sort of quickly this space may have to move to accommodate that demand?
Absolutely. Well, obviously, the research has indicated that we've seen a strong move from the under 45s to move to self-directed vehicles. And as the wealth comes down the chain to them, they'll be placing those amounts in self-directed vehicles. And so I think it's a bit of a clarion call to the traditional superannuation funds to say there's probably urgency to think about how they evolve their products, their structures, to meet the requirements of the younger generation much more meaningfully than they are at the moment. I would certainly, look at the trend, especially the establishment rates of SMSFs, and be looking at that and thinking, we actually quite urgently need to be evolving our product set, the service that we offer, And so, yeah, I'm hoping that this will be a bit of a clarion call for the industry more broadly.
Certainly. And we sort of see this being relevant to superannuation more broadly as well. CoreData did some research last year among crypto holders, and actually 2/3 of them supported the idea of having digital assets in their superannuation. And we did that as a nationally representative study, so that actually means that there's 8% that have that appetite in Australia, and that's not insignificant at all.
Yeah, no, I think, and again, we're seeing it more broadly in terms of the pool. I've sat on panels with people from the superannuation funds and, kind of talked to them about what we're seeing. And indeed, they themselves confirmed to me that I don't need to look at the data. I can look at the emails we get. I can look at the phone calls we're getting from our clients who are saying, I want this exposure to alternative asset classes. How can you provide that for me?
And I think that this is a topic that many people sort of discuss as in it only coming up in a hype cycle, which we're currently not in. But I think as we start to see those structural changes, it becomes much more normalized to have tokenization and digital assets in your economy. So I think that, it may particularly change as we get sort of used to it. When we sort of began with digital money, it took us a while to get used to it, just in terms of bank transfers and so on. Now it's normal.
And I think 2026, we're at a particular inflection point because we're seeing multiple forms of technology hit the acceleration phase of the S-curve, the classic transformation S-curve. And so alongside kind of blockchain technology and distributed ledger technology, which underpins digital assets and makes it possible, we're seeing stable coins come to the fore, and the flows of stable coins globally is more than Visa and MasterCard transactions combined. And we're also, of course, seeing AI and agentic commerce really hit its stride. And so if you think about the convergence of all of those different forms of technology, the rate of change really will never be this slow again. And so if you're a superannuation fund and considering this, I think that the clock is ticking. And all of us as consumers are enabled by technology in a way we never have been before. And so I think it's likely, and this is my opinion, that we're going to see the themes that have come out in this research actually accelerate. It's going to be interesting to see how quickly the industry can respond.
And I think that sort of brings me back to that DFCRC research that you did and how big of an opportunity this actually is for Australia.
Yeah, absolutely. So we did a piece of research with the Digital Finance Cooperative Research Centre and the Digital Economy Council of Australia, where I'm co-chair. And the research took place over a 12-month period. And it was completely independently done by the DFCRC. And what it found was that the potential productivity gain for Australia from digital finance is about $24 billion per annum. That's the equivalent productivity uplift of about 1% GDP. But the important finding of the research was that we're only on track to unleash about $1 billion a year. And so the call to action there for the Reserve Bank of Australia, for our politicians, is to really help develop Australian sovereign digital finance infrastructure through fit-for-purpose regulation and through cross-industry collaboration and coordinating that cross-industry collaboration so that we are able to benefit from the technology developments happening with the financial system. All of which, of course, feeds into the broader narrative, the broader story of the transformation of the financial system globally, of which this piece of research on SMSFs it gives us one lens on what's a much, much, much bigger thematic.
Clearly, there's a lot of work to do for us to actually get there as a country. Thinking about the financial services people that may be listening to this research, what would your message be?
I think my message would be the pace of change will never be this slow again. I said it before, but I'll say it again. And so it's incumbent on each and every one of us to make sure that we are armed and educated with what's happening at the frontier. And then we're adapting our craft based on that. And there's multiple ways to do that. Listening to podcasts like this is one of them. But I think that for all of us, we have to be curious. We have to be hungry to learn, to understand where there is data available that demonstrates perhaps a counterintuitive things, like interrogate that, understand that, kind of be interested in that. And then I think we have to push for fit for purpose systemic support, including regulation, that mirrors the fast moving frontier of technology.
Mm-hmm. Wow, well, it's been a fascinating conversation with you, Kate. Where can people go to learn more about OKX and what you're doing in this space?
The best place, of course, is our website, okx.com, but we're also very active on LinkedIn. So follow us, OKXAU, specifically on LinkedIn, and that's where you'll be able to hear the first examples of this report. Download it.
Really looking forward to it. If you would like to learn more about CoreData, then give us a follow on LinkedIn or search us up on Google. You can also email me at anna.vennonen@coredata.com.au. It's been an amazing conversation, Kate. Thank you so much for being on and sharing all your thoughts in this space.
Thank you, Anna. Thank you for your support with the research as well.